Folks, one of the things that makes One Rental at a Time different is we reach out to and get amazing contributors from across the real estate landscape. We have the one and only and amazing Lance Lambert and his son Leo with us today. We have a lot to talk about, but Lance, how's it going?
Going good. Housing. Always a lot going on.
Absolutely. And also, Leo, how are you? Hi.
You say hi?
Awesome. Thank you, Leo. Hi. That's amazing. So the first thing I want to talk about today is the existing home sales. Existing home sales for February, if folks haven't checked them out, we're up 14.5%. Last month was 4 million, up to 4.528, if I remember correctly. Nonetheless, barn burner number way above expectations, which was 4.2. My guess was 4.35. So my guess was above the majority, and it blew it out. So what'd you see? I'm sure you were shocked by that number Wednesday or Tuesday morning.
Yeah, the number definitely was very high. And demand has warmed up as we came into the year. There's some of that acceptance of buyers like, hey, mortgage rates of 3 to 4%, they're gone, right? I'm going to need to move on with my life type thing. So the acceptance, there was some of the pricing had moved down in the Western markets, got a little better aligned with affordability, just enough to move the market. And seasonality came alive. I think what happened is the latter half of last year, which is always a slower period, that part, it overcorrected too far in the drop in activity, right? People were like, I'm just going to wait and see what happens, right? And they came in, prices were not crashing. They kind of came to acceptance with mortgage rates. And so we moved up. But there is a ceiling to how much existing home sales can move up because the supply side of the market. There is not a lot of new listings coming on the market. The monthly numbers for Realtor.com, they're down about 20% year over year. We've seen the seasonality move in, right? We've seen January be higher than December, February new listings be higher than January, but it's very low. So you could see numbers about like new listings starting to move up right now, but on a year over year basis, it's very low and it's not going to support a huge run up in home sales. So I think we're still a constrained market, but we've turned a corner. It's a different market than it was in September, October, November, and December. And, it'll be interesting to kind of see what. Now, keep in mind, we still have some of the data from last year rolling in, right? Some of the sales that have closed at the end of the year still rolling into the newest data. So when you see Case-Shiller January, it's probably, I think a very good chance it's down because it's a lot of those, it's a 3-month average. A lot of those sales rolled over from the end of last year, still down. Would be my guess. Based on, also, I'm talking about the seasonally adjusted numbers. For the Schiller, one thing to keep in mind is national home prices on a year over year basis are up 5.8. But from peak, we're down 2.7 on a seasonally adjusted basis. Right. On an adjusted basis, we're down 4.4. So down 4.4 versus 2.7. So I think what's going to happen is these next few months is some of the unadjusted declines make it into the seasonal declines, even if there's a chance some numbers move up. So it's pricing is the very lagged at the very back of everything else. And so it'll be interesting to see what happens. But the existing market, some improvement, not a lot of supply. And if you want a particular type of home, it's tough.
Yeah. I have some really important thoughts about the existing market, but as a dad, I want to check on something first. Leo looks to be eating on something that has plastic on it. Is that okay for him to be doing?
He's good. I think he ripped it open. I don't think he got the plastic in his mouth. I was kind of hearing what he was doing, and I
just want to make sure.
Right, you're not eating the plastic, right?
No, good. Okay. No, good, awesome. Thanks, Leo. Just checking on you, buddy. So one of the things that I want to run by you. So first and foremost, a couple of things. One thing I did in January is I called the bottom in transactions at 4 million. I still think that's true. And to your point, I think February's 4.5 number, seasonally adjusted or annualized, I should say, annualized, may be the high through the summer because of supply. So I think both of my statements can be true. We bottom at 4.45's the peak. I think we're kind of in the 4.2, 4.3 range because of lack of supply. But this is what I want to ask you, Lance. This is something I've heard nobody talk about. When you study economics, there's a supply and demand curve. I think when you layer housing over a supply and demand curve, I think we learned something about February. This is what I think we learned. A 6% mortgage rate brings on demand. The margin of buyers come back. Unfortunately, as you correctly pointed out, supply does not move at 6%. I've had many people estimate it would take a 4% mortgage rate to unlock demand. Whether it's 4, whether it's 4.5 or 5, it doesn't matter. What we can say with certainty is it's not 6%. So I think we're in a wild environment where if rates trend down, it unlocks demand without unlocking supply. So the lower end or entry level, I don't have a lot of good news. Bidding wars, offer review dates. It's just the market's broken, man. It's just broken.
Well, and so when we talk about supply, with the people who are like, you know what, I'm not going to sell my home. I'm not going to go buy another home. It doesn't make sense because the affordability aspect where you're giving up that rate. The price doesn't necessarily matter a ton because you sell into whatever market you're buying in.
Yeah, exactly.
So not a ton there, but the rate matters. But as the rates come down, in theory, more of the move up buyer / seller comes back in. So it's an impact on supply and demand. So you have an interesting thing where you could kind of have a market where new listings are moving up, but there's also demand moving right with the new listings, which is also why reversely, you were able to have new listings go down 20% and still give up some of the top spring pricing, right?
Exactly.
New listings is very low, but you have the demand moving off right with the supply.
Mm-hmm.
But as it comes back, where the supply hits and where the demand hits are two different places, right? So right now you have the move up buyer seller be gone, and their demand was going to go higher. So that demand is gone, but their supply that's not coming on the market is lower. So that's supply. So so I hear your point there, which is the bottom of the existing market, there's not going to be a lot of options probably for a long time, and it's going to be tight. And I think what you need is creativity from builders who builders have been hit more at the higher end in a lot of these markets.
Of course.
Now, some markets it's lower. It's a little bit of a mixed story. KB was talking about it. But some of these builders probably need to go focus more on the entry level, right? They need to get
that's the only way out of this. Again, one of the things that I've put out there that I think is controversial, which I think I'll be proven right again, is builders were gain market share, certainly at the entry level. The first builder, and I think Polte talked about it in the last earnings release, they have to build smaller footprints to give them a better chance at the entry level. Because again, this entry level is not coming. And I want to really stress the fact, you are absolutely right. Supply and demand says as price, AKA payment, comes down, it unlocks demand. And what we learned in February, or at least it is my hypothesis, is we can now say with empirical evidence, 6% unlocks demand. It does not unlock supply. Could it be 5.5? Could it be 5? I don't know where supply gets unlocked from the move up buyer, but I can say based on February, it's not 6%. How's that feel?
And I think that makes a lot of sense. The only other thing I think could move it is expectations that mortgage rates are going to move down very quickly, very fast.
Maybe
can start to freeze some stuff up. But yeah, we've kind of seen how the market would react to this mortgage rate shock. And we've moved through a lot of it, and it'll be interesting to kind of see how the story moves now. And that's, Do we want to go ahead and move into new construction?
Let's do that as a separate video because I think that's an
Yeah.
important topic.
Yeah.
So what I want to do is we wrap this up one again. Existing home sales, I do not expect March to be 4.5. It'll be between the 4 and the 4.5. I don't. But again, you can't have a sale if there is no inventory. And what we are seeing now is any inventory that was left over from a very cold and slow winter has been gobbled up. There's not a lot of new listings coming on, so I do not see us repeating 4.5. Just because supply's there, you need supply to create a transaction. Lance, you are everything housing. You have an amazing Twitter page that people need to follow. I recommend it at least once a week in my daily financial news. What is it, and where can they find your articles?
Yeah, they can find the Twitter. Well, they can find me three places. They can find me on Twitter at News Lambert. They can find my articles Googling Lance Lambert Fortune, and they can find me here. This is the only other place that I go. So love being able to chat about housing with you, Michael.
Awesome. Thank you, buddy. Thank you, Leo. Bye, Leo.
Bye.
Oh, that's